Hey, in this video, I'm going to talk about AMT on your incentive stock option. So for your incentive stock option, because this stock option is created under the section 422, under the incentive stock option plan, it's a statutory stock option. So you have a favorable tax treatment. So basically say if your employer grants you a statutory stock option, you generally don't include any amount in your gross income when you receive and exercise the option. So if you want to learn, the basic how the tax favor treatment on the incentive stock option, you can watch my another video that is how incentive stock option is taxed. So this one I'm just focus on the alternative minimum tax. So here they just told you, when you receive and exercise option, you do not recognize any taxes for your ordinary income tax. Okay, so only when you sell. When you sell, you meet the tax holding period. You will be taxed at a favorable tax rate, which is the long-term capital gain tax rates. However, because there's favorable your tax treatment, so there's alternative minimum tax implication here. Alternative minimum tax basically is designed to capture the tax, like when a taxpayer has too many deductions and the tax break on everything, so they want you to pay some of the tax. So this alternative minimum tax just is a different way calculated the tax. So if this, the different way calculated the tax amount higher than your regular tax, that you're gonna have to pay the difference, which is called AMT, alternative minimum tax. Okay, so I'm gonna go through some information. This is from IS publication 525, page 12. So just some information from IS website say, for the AMT, you must treat the stock acquired through the exercise of an ISO as if no special treatment apply. So basically, you have a special treatment on the ISO. So in this case, just say, hey, you have to treat your stock has no special treatment. Then this means that when your rights in the stock are transferable and no longer subject to substantial risk of the forfeiture, you must include as an adjustment in the figuring alternative minimum tax income in the amount by which the fair market value of the stock exceeds the option price. So I'm going to show you an example later. So basically, here just say when you exercise your option, you basically own the stocks. So in this case, you have to recognize the alternative minimum tax. So this is called the adjustment. So basically, say the time you exercise your option, the price difference, above your option price. So the amount times the shares you will calculate as called the adjustment. So you would put this adjustment on the line 2I of the form 60-51. So I'm going to show you later how this works. Then increase your AMT base in any stock you acquired by the exercise by the amount of the adjustment. So that's something we just talk about here. They mentioned that. So no adjustment is required if you dispose the stock in the same year as you exercise the option. So basically, if you exercise your stock option, then turn around sell it. So you would recognize you no longer have the favored tax treatment. So so you would recognize the ordinary income in your regular tax. So it's definitely higher than your alternative minimum tax. So in that case, you don't need to worry about the alternative minimum tax. So only when you worry about, you want to exercise it, then you hold another, longer period of time, then decided to sell later. So that is the situation you would worry about your alternative minimum tax. Okay. So let's go see example. Say you are an engineer at Amazon and your salary was over $400,000 in 2021. Amazon granted you an ISO on May 21st, 2017 to buy 100 shares of Amazon at $1,000 per share. Its fair market value at that time. You exercise the option on March 25th, 2021, when the stock was selling on the open market for $3,000 per share. So in this situation, let's go over this. Your ISO is 100 shares. Then granted is May 21st, 2017 at $1,000 per share. Exercise date is exercise basically on the March 21st, 2021. So you decided to exercise, you bought this 100 shares at $1,000 per share, but you didn't sell in 2021. Okay, that's the case. You didn't sell. You only exercise. You still hold those stocks, but you didn't sell. Okay, you didn't recognize any gains, but you have a phantom gain. You bought at $1,000 per share. You could turn around and sell at $3,000 per share, but you didn't. And so it kind of like a phantom gain right here. So you have a $2,000 per share gain for 100 shares. You have a $200,000 like a profit. So this one basically called your AMT adjustment. So this AMT adjustment can be on the form 625192I. So that's basically how you to understand it, the amount gonna be go on the AMT form. Okay. So before I'm gonna show you how to compare your regular tax with your AMT tax. So before that, you may wondering, say, okay, so I exercised, but I didn't recognize. I bought the stocks, but I didn't recognize the gain because I didn't sell. How the government knows, how IS knows. So IS basically said, if you exercise the ISO during the 2021, you should receive a Form 3921, a statement from the corporation, in this case is Amazon, for each transfer made during the 2021. The corporation must send and provide you with the form by the January 31st, 2022. So you keep this information for your record. So basically, your information is being reported to IS. You can see this is the form form 3921. This is copy A is for IS internal service. You will receive the copy B. You can see for previous example, you can see the date of granted, date of exercise, then a granted price, then you exercise price, how many shares. So IS know exactly how much profit, phantom profit, they could included in your AMT amount. Okay, so that's something why the government knowing the things. So I'm gonna show you here how to compare your regular tax on your with your AMT. Let's say in the example, assume you were single, so it's a single filer. Okay, so on your taxable income, which is 1040, on the line 15, you would get a $400,000. This is $400,000 on your line 15. Okay, So this is a taxable income. Based on your taxable income, we use a tax table to calculate your taxable tax amount, which is on the line 16 is 114 and 544.3. This is the amount of your tax, regular tax, okay, you would subject to. However, because you exercise your incentive stock option, so now you are now you can recognize some alternative minimum tax. So alternative minimum tax, you basically go to the form 6251. So they follow the form, instruction. You transfer the number is on the line 15, which is $400,000. You add your standard deduction. Here, I assume you only have salary income. You didn't have any other income. Okay. So if I have any other, capital gain, anything like that, so gonna be a little bit different. Okay. So I'm assume you only have an ordinary salary income in this case. So you only do standard deduction. You don't have, itemized deduction. So you would add back your standard deduction. Then you add your ISO adjustment. This is $200,000. So you can see here. Then you get your AMT income. This is AMT income amount. You allow a exemption. It's similar like a standard deduction. However, this exemption, for your single, you are around, if your income is below 523,600, you would get a 73,600. But because your income is above this amount, you would reduce your exemption amount. So you are reduced to 51,362. So that's your exemption. So your AMT income minus your exemption amount, you would get a called taxable AMT. So this taxable amount, you apply AMT rate. Anything above this 199,900, you would tax it at 26%. Anything above is 28%. So this is amount of the tax you would subject to. You add them together. This is called tentative minimum tax. You compare the tentative minimum tax with your ordinary income tax. So if the tentative minimum tax is higher, basically you subtract the regular tax from the tentative tax, you would get this, the higher amount called alternative minimum tax. This is actual tax you have to pay. So that's why you would consider what is alternative minimum tax when you decide to exercise your ISO and you are not sell in that year. You may get hit for AMT extra tax. That's why this is the something here. So I just want to show you. So if you want to if you want to exercise less amount, just say, hey, how about I'm just gonna exercise, like 100, sorry. So you will see the AMT is reduced, right? So you will like, okay, so how about I'm just recognize like 60, sorry. So then you will not subject to AMT. So this is just that, well, you can do some tax planning, you can do exercise some amount in the, in last year, some amount in this year. So that's the tax planning coming in the place. You do not exercise the entire amount, in the single year. You may exercise in different years, so you would not get hit the